What if the biggest economic shock in North America did not begin with a speech, a summit, or a press conference, but with a government alert at 2:47 in the morning? While Canadian markets were closed, and while most ministers were asleep, a message reportedly flashed across the phones of senior trade officials. The United States had signed a new tariff order, 43% on Canadian manufactured goods, effective in 72 hours. No warning, no consultation, no diplomatic call. Just a midnight decision with the power to shake one of the largest trade relationships on Earth. But what happened next was not panic, it was not confusion, and it was not a normal political reaction. According to this account, Prime Minister Mark Carney was contacted at 3:04 a.m. By 3:31, he was already inside his office. Before sunrise, he had made calls to Canada's financial leadership, provincial premiers, European officials, Asian partners, and major pension fund executives. But there was one place he did not call: Washington. Not once. By the time Wall Street opened, Canada had already moved. Then, at 8:47 a.m., Carney appeared before a single camera and delivered 6 words that instantly changed the tone of the crisis. Canada does not react. Canada redirects. That sentence was not just a slogan. It was a message to Washington, to global markets, and to every country watching the collapse of old economic assumptions. For decades, the United States and Canada were not just trading partners. Their economies were built into each other. Cars, steel, energy, lumber, aerospace parts, pharmaceuticals, entire supply chains crossed the border again and again before a final product ever reached the consumer. That is why this tariff order was so dangerous. It did not only threaten Canadian exporters, it threatened American factories, American workers, and American companies that depend on Canadian inputs to keep production moving. Analysts immediately began warning that the cost would not stop at the border. It would move into assembly plants, energy systems, construction projects, and consumer prices. But the deeper shock was strategic. Washington appeared to believe that more pressure would force Canada back to the negotiating table. Carney's answer suggested the opposite. Canada, according to this version of events, had spent months preparing for exactly this moment, building new trade channels, expanding energy buyers, strengthening ties with Europe and Asia, and reducing its exposure to American political pressure. In other words, the tariff was meant to stop Canada. Instead, it may have accelerated the very redirection Washington feared. Markets reacted fast. Trade-sensitive stocks came under pressure. Currency traders moved sharply. Industrial analysts began recalculating costs. Political leaders in affected American states warned that workers could pay the price for a decision made in the dark, without a clear exit plan. And that is the real question now. What happens when a country uses pressure against a partner that has already built alternatives? What happens when escalation no longer creates leverage? And what happens when the threatened country simply stops reacting and starts redirecting? Carney's 6 words may become the defining line of this crisis. Canada does not react. Canada redirects. And if that is true, then the most important economic shift in North America may not be coming. It may have already happened. Subscribe and hit the bell for more daily updates.